Welcome back to our Forex trading series. In this chapter, we're going to talk about fundamental analysis. Fundamental analysis is a method of evaluating a currency's value by studying economic indicators, news releases, and central bank policies. It helps traders understand the underlying factors that drive market trends and make informed trading decisions. Economic indicators. Economic indicators are statistical data that provide insight into a country's economic performance. Here are some key indicators. GDP, Gross Domestic Product. This indicator measures the total value of goods and services produced within a country's borders. It indicates economic growth, size, and performance. GDP growth rate is a key indicator of economic expansion or contraction. CPI, Consumer Price Index. This tracks changes in prices of a basket of goods and services. It also measures inflation, which is the rate at which prices are rising. Employment data. Employment data is the statistical information and metrics that describe the labor market and workforce. This includes data like unemployment rate, jobs added, average hourly earnings. This indicator helps traders know the health of the job market and economic growth. There are still other indicators used, but these are the main ones. News releases. News releases are events or announcements that can impact market sentiment and currency prices. Some of these news releases include political decisions. A political decision is a choice made by a government, political leader, or policymaker that affects the public, a country, or a specific group of people. Example: elections, monetary policy changes. Natural disasters such as hurricanes, earthquakes, and the other natural disasters can cause trade disruption which can affect the production and export of a country's goods, which leads to trade imbalances and affect the value of its currency. Geopolitical events. Geopolitical events refer to significant occurrences that shape the relationship between nations, states, and territories, impacting global politics, economy, and security. Example: wars, trade agreements. Understanding central bank policies. Monetary policy is an action by a central bank aimed at regulating the money supply and interest rates to promote economic growth, stability, and control inflation. Central banks use monetary policies to control inflation, growth, and employment. Their decisions impact currency prices. The central banks use various tools such as quantitative easing, bond purchase or sale, but the most common tool used by the central banks is interest rates. Interest rate is simply the cost of borrowing money. This is the rate at which borrowers pay interest on loans set by central banks. The higher rate attract investment capital from foreign investors seeking higher returns on bonds and interest rate products. If there is a rate hike, the currency will appreciate. This means that investors will buy. If there is a rate cut, investors will probably sell and buy currencies with higher interest rates. Higher rates mean more interest accrues on currency invested and profits are higher. By analyzing economic indicators, news releases, and central bank policies, traders can identify economic trends and patterns, analyze news releases and market sentiment, understand central bank policies and their impact, set trading goals and risk management strategies, execute trades based on fundamental analysis insights. Inflation CPI in the UK is declining, which is bearish for the British pound. Fed raises interest rates to control inflation in the US. Bullish for the US dollar. Pound sterling to US dollar price falls as US dollar strengthens. By having the knowledge of fundamentals, we were able to know how the news is going to impact the currency pair. This is the power of fundamental analysis. By combining fundamental analysis with technical analysis, traders can make better trading decisions and positively impact their trading performance. That's it for today. In our next video we'll talk about technical analysis. Don't forget to like and subscribe. See you in the next video.